Hey traders, Nick Shaheen here looking at Apple. Let's see. This is arguably the most valuable company on the planet. I can make arguments for that, against that. The fact is it's not growing, the top line. And when you're not growing and all the companies that are like you are growing way fast, it's a problem long term. Not to say that it's dead. It's certainly not dead. It's a cash cow. But so much potential wasted on Tim Cook, in my opinion. Most overrated, probably, CEO of all time, given that the company is the best, arguably, of all time. So give it to somebody else. They'll do so much with it, more than this guy has done. Having said that, now you know how I feel about the management. I don't hate the company. I only traded on the long side. Today is to see if we can find some levels that are actually tradable. And I recently traded it a couple of times and shared it with subs, and they were home runs. And I'll share the concept, and it's a repetitive concept. First of all, turn off the news. Trade what you see in the charts and what you believe in the company. So if you believe that long term it's up and away, then the goal is to probably buy the dips. And I know Kramer mocks people that actually trade Apple, but he's a hypocrite because he too gave up on Apple during the correction that we had. He said that they bailed on it in his Action Alert Plus whatever. So if you bailed on it once, you should shut up about it and not mention it again about people who actually trade around the price action. If you see an opportunity short term, it's foolish to ignore it. You can ignore it, that's fine. Don't mock the people that don't ignore it and act on it. Okay, having said that, let's get to the fun part. This is the daily chart. Let's see. 1 year. You can see that there was an absolute repricing of risk. We had the biggest problem of all time here, and look where we're at. So I get it if Zoom wants to be up here. I don't get it why Apple is up here. But that's besides the point. The price action that I'm going to discuss is up here, but I first want to lay the lay of the land here. The volume profile, meaning for the last 12 months, most of the volume, even though a lot of the time was spent up here, the bulk of the volume is down here. That orange line marks the highest point of contention. So this is where the buying and the selling happened most often by a long shot. All of this stuff here, look at the volume. You can hardly see it down here. These volume bars happened in this zone right here. This is called the value area. So the bulk of the price happened here. That doesn't mean it doesn't belong up here. It means it has to consolidate. It needs time to digest. What does that mean? It shouldn't go up and away more before it digests this. Otherwise, you'll end up with a very steep gooseneck that is liable to crash. You can't build a building going like this without having to prop it up every once in a while. You have to, machines have to do this and build it. So anyway, having said that, this is the big picture. Let's zoom in on the smaller picture. Let's go to 2 hours, 4 hours. That's probably better. There we go. If you remember just a few weeks ago, we fell off a cliff and the world was ending. People were running for bunkers, collecting guns and ammo. It was clear the day it bottomed. It was super high volume after hours. There's giant closing candles, like 57 million shares or whatever. And the print was like 103 something that day or close to it. I thought 105 would hold. I knew that there was support at 103 and change, and definitely the 100. Now the 100 is a psychological number, but in this case, it's an absolute number, and I'll show you what I mean. I'm still feeling bad about knocking Tim Cook down like that. I mean, he might be a nice person, but as a CEO, he's overrated. Okay, so no, I'm not feeling bad. I'm just kidding. It's fair game. I get knocked all the time, so it's fair game. So this point was fail. Remember, that was pre-split. It got to a round number. What was it? 400. So it got to like 399.9 or whatever it was, like pennies, like 14 cents away, and failed. And then it got to almost it 3 times and failed. And then the earnings came, and it was a game changer. The earnings were like a blowout. So they said, wait a minute, what were we dicking around here for? Let's go. And this rally, if you remember, was breathtaking. Literally, it was like, wow, it was amazing. And then the world ended, as we all know. Clearly it didn't. But here, there was a Head and Shoulders or another neckline that they fought over. They survived it. Yeah, they went below it, but the bottom held. So I knew that the psychological 100 century mark was here. On top of it, I knew that there was tangible support at 102, 103, and at 105, and whatever that line is here, that might like 107 or whatever. So I had many lines of support. So I was confident I was going to catch this falling knife. I was just waiting for something. And that one day, I can't remember the day, I said, we're going long. I'm going to do a bull put spread at the money. Usually I don't do that. I mean, it's a falling knife. Nobody was saying go out and buy it. Steve Grasso was saying it's going to 90, 89. So on that day or thereabouts, I said, bull crap, it's going to 89. And if it is, I'll triple my bet. I did the same thing the last time it fell to 90 before the split, like 2 splits ago. And they were calling it down to 75 on a technical call. I said, you guys are missing the logic in this. It's not all about technicals, and I am all about technicals. Sometimes you have to infuse some logic. And the logic said, buy the dip, regardless of what these folks in the media are saying. So the sold put spread, it held. So I'm saying that to tell you that there is a floor in this zone. There's a floor right here, and there's a neckline right there. So any rally that you didn't expect it to fall down to here is unrealistic. So last Friday, when they were still battling in this, I said, I'm going long Apple into Monday. And hopefully we'll get a pop and get out before the event. Ta-da! Okay, so I said, if we don't get it here, we're going to get it before the earnings, which are coming soon. So it was like a freebie, almost like a lottery ticket that you get a pre-drawing and then another drawing. It was beautiful. Inverse Head and Shoulders still has more upside on a technical basis. Like, that's a neckline. When they break through, they go as long as this, maybe. But there's always resistance. I expected that this cluster was going to be resistance. So up here, it wasn't a clear point of entry, and I may have tweeted that too if you wanted to go see. But it's not reason to short either. And it's also good reason not to get surprised when it falls 2% after a 6% rally out of nowhere on Monday. So use logic. And in this case, there's plenty of logic. Here's Apple's chart. I can't remember what I said on the chart that I actually published. So let me see here. Let me reset to make sure that the notes are in the right spots. Let me go to 120. All right. So this was my plan for today. And nothing happened. All today's action was within my plan. So I didn't do anything on Apple. I could have scalped the bottom here if I was on a 5-minute basis, but I don't trade that fast because I'm busy during the day. And today I had a presentation on Wealth 365 for about 1,000 people, so I definitely didn't have time to trade it. But clearly there was a range, tradable, support, mini support, support for a fill the gap. So if you lose this one, you're going to fill the gap. Not a game changer. We're back to the neckline from Friday. Beautiful. If you missed it, there you go. That's your, as a trade, not an investment, as a trade. So forget the headline, use logic, draw some lines. And guess what's the primary, these lines all here, they're all hand drawn. How do I get to these beautiful lines? Beauty is in the eye of the beholder. It's eyeballs. I look left and I see what happened the last time we were here, and I project, hey, we fought over it last time, we're going to fight over it this time. So use eyeballs. So let me go down to the 30-minute chart and reset it. So this is the neckline from Friday. We're just zooming in. Oops. Why is this so long? We're zooming in on the same stuff. Right? That's the mini range inside the day. Let's go to 5 minutes. Okay. Reset. There we go. So once you held, you start looking for higher lows, and then you break the last 3 fails. Now that becomes the neckline. Same concept repeats on a bigger time frame right here. You hold, you come back out. So now we have a descending trend right here. Right? I'm not one to chase trend lines, although that is doable. So now I guess I'm giving you up until now, it's what happened and how you could have done better, or better clues that you may have missed, or at least the clues I saw. So here's a descending trend line. Some people like to chase the breakout from it. Like as soon as it crosses right here, they'll assume breakout and they go. I'd rather see the breakout from the level, this level, that level, and then I chase. And in this case, this would kind of be some sort of a neckline, like a cup and handle or whatever. So I would agree and believe that it's going to go that much. And look at what that coincides with. Oh, I'm glad we looked at it. See these two candles right here? Pretty big, right? Almost the same, right? Two candles, pretty big, almost the same. What if we drew a box right here? That's a tradable range. So above this neckline, we'll come up to the top of the range. Time to get out for a trade. So these two, if I wanted to draw a box, see, that's how the beautiful boxes come to come to life. Okay, so oh, look at this. This point right here, a bottom, correct? Look at where the fail happened. There are no coincidences. Look at this neckline. Tested the neckline on this candle right there. Right there. And if I eyeball this, what is that, 50% Fibonacci? I'm not a Fibonacci guy, but they do come in handy. Boom! Holy crap! To the penny almost. To the penny. I didn't get the bottom of the candle right here. To the penny. Bam. Okay. So now you know. It's not news. Who cares about the iPhone? This does not change how much money Apple's going to make. It's going to make a shit ton of money. 3 iPhones more or less, it's not going to matter. People liking the phone or not is not going to matter. People buy phones because they have money, period. End of story. So trade the Apple price action, fade the sentiment here. So because they're just a bunch of noise in the news that's going to cause you to make mistakes. Pay attention to this candle right there. That's built around 120. When is that? September 4th. That's an important candle. Take the edges of it. Don't do much around these edges. Like if price is rallying into that edge, fade it. In fact, that's where these two failed. They did not close above it by barely. This one barely closed above it. The second one did not. It stepped above it but failed miserably. Also, don't short it going into that level. So that green line I put there, 110, round number. If it falls into 110, don't run from it. Don't buy puts in it. That's where you say, you know what? Everybody that's buying puts, I'm going to sell you some puts. All right, Nick signing out.